I'm Sarah D. And this is...
I'm Dr. D.
Yes, and we're getting together again here with you. Today we're going to talk about, actually Dr. D is going to explain to us what a central bank digital currency is. And
CBDC. Ooh.
Well, that's what it is. It's CBDC. Okay,
Yeah.
We're done. Thank you. No, that's whatever. And then go over the key takeaways from that part, because what it is a little bit perhaps confusing for you. I know people are saying a lot of things about what it is that is not accurate. So number two, we're going to talk about the goals of the central bank digital currencies, the CBDCs. Then we're going to talk about the issues a CBDC addresses.
Fixes.
Fixes. And then we're going to end with the issues a CBDC creates.
All sorts of cool things.
It creates problems. Okay.
Well, everything, right? There are no solutions. There are only
trade-offs.
Trade-offs. Yeah, it's an economic principle. No solutions, only trade-offs. Yes. So we need to unpack the concept central bank digital currency, right? Because there's three things sitting there. One is, what is a central bank?
Yes.
Right, so a lot of people...
Is that the one in the center of the town?
Yeah, it's the bank downtown, on the town square.
And if you don't have a circle, you don't have
Yeah, or the town square. It can be So, what is a central bank, and what is its purpose? What does it do? Those kinds of things. And so and then what is a currency, and then what is a digital currency?
Right. We've talked about what a currency is. We have a post on that.
Yeah, we have a post on what a central bank is, so we can just...
And that too. We can refer to that. We'll put that in the notes.
Yeah, you can refer to that. And really what a central bank is the controlling entity of the amount of money in a particular economy.
So the central bank determines how much money there will be in a particular economy.
It also has this other principle where it regulates the private banks to make sure that they're acting in good faith. That is, just like, they're the police officer of the private banks, making sure that they act in good faith. Right. So that's a secondary thing that they do.
Okay.
And so that's also what central banks do. And
can we trust them to be able to do that? We have to trust somebody.
We've got police officers making sure,
right?
So it's like okay.
Yes, okay. We don't live in a perfect world.
We don't live in a perfect world, and so there are people that will do weird things. So, for example, there was a private bank called Lehman Brothers.
Yes.
And it ceased to exist. And people who had money in Lehman Brothers, their money evaporated. Had nothing to do with the central bank or anything else. It's just that the bank ceased to exist and their money evaporated.
But didn't the FDI...
No, that was not a commercial bank.
It was a private bank.
It was a completely private investment bank, and it was not protected by that.
Kind of like Bitcoin.
So just recently, for those that have there's a, what would we call it? A cryptocurrency exchange, FTX, that collapsed. And the people who had currency, whatever cryptocurrency in that particular exchange, that's just a fancy word for a bank.
And they invested dollars in that currency.
They invested dollars to buy the currency, and they put the currency in that bank, and that bank went away, and the currency ceased to exist, right?
So they basically lost all their dollars.
Yes, it's gone.
Okay.
It's gone. The Federal Reserve and the FBI and those guys may be able to track down where it went and be able to grab back and bring it back.
Oh, they're trying to.
Absolutely. The government does weird things.
Even though it wasn't a government.
It's not a government thing.
It's not FDIC. They're just thinking
That's right. And oh, by the way, it was registered in the Bahamas, so it's not really an American thing. And so all of this kind of stuff.
So they're trying.
Yes, so the Central Bank of the United States and the Treasury and the FBI are trying to do forensic accounting to find out where this stuff disappeared to, and they're trying to reach and bring back as much of it as they can.
Right.
You know, I think there's like 60 or 80 billion dollars worth of stuff that just disappeared. overnight, essentially disappeared, right? So that's a digital currency, a private digital currency in a private bank that was unregulated by central banks, and it just blew up and disappeared.
Right.
Lehman Brothers was a very respectful organization, and it blew up and disappeared.
Long time.
Right. Back in 2007.
But I mean, it was respectable.
It was respectable for a long time, right? So stuff happens in financial systems,
Right.
even when they're tightly regulated. Lehman Brothers, tightly regulated. FTX, shootout at the OK Corral, regulated. Not very regulated at all, right? Stuff blows up. So the central bank has part of its mission is to control the banks that are within its framework that it's allowed to control. Actually, because of the crash of Lehman Brothers, the Federal Reserve now regulates investment banks. Yes, these more private banks inside the United States.
So they regulate them more than they did the Lehman Brothers.
Yes.
Okay.
Yes. And they can do something for the problem of Lehman Brothers. And we'll talk about all those kinds of things. So it's important that one understand that's what a central bank does. What is a currency? A currency is just a fancy name for money in some realm. Right? So currency is a money in some realm.
So what it does, a central bank does, are we at a takeaway right now?
Yeah.
Yet? So a central bank decides how much money, how many dollars will be in we're speaking of the United States Central Bank.
Yeah. Okay. So the Federal Reserve.
The Federal Reserve determines how many dollars will be in circulation within the world.
Yes.
So they determine that, and then they also oversee regulations.
Right. So they determine the money supply, and they have two purposes for determining the money supply.
Right.
One purpose is to control inflation.
Right.
Keep inflation low. Have a stable currency.
Right.
So that's one reason. And the second reason is to keep the economy flourishing and keep the unemployment rate low, or what they call have full employment.
Right.
So those are two directives that they have for controlling the money supply.
Yeah, and with the interest rate stuff, with what's been going on now, people are actually a lot of people think that the Federal Reserve is awful, and they think that we should do away with it, and because they think that inflation is high.
Inflation was high.
And they're bringing it down.
That's the goal. They're restricting the money supply to bring down.
So they're doing that shred money thing.
They're shredding money to bring down the inflation rate.
And
That's
we talk
exactly
about
what the
that in
Federal
another one
Reserve.
of our
Yes,
posts.
that's exactly what the Federal Reserve is doing.
So if you're still a little bit confused about what the Federal Reserve does or is, there is a post that will explain it.
Yeah. The word they call that is the Federal Reserve is reducing its balance sheet. I mean, they've got all these cool words and they sound scary, but they aren't.
Yeah, and again, that I really encourage you to see that post if you're concerned about it, because it explains it really well. We play a money game and a thing game. Okay.
So, and then we've have to talk about money. What is money? And here in the United States, we have something called fiat money. The dollar is fiat money. It's money by law. It's not backed by anything.
Right.
By the way, Bitcoin is not backed by anything.
Right.
Right? A computer generates it from some algorithm and it just exists, right? It's not backed, but there's no gold backing it up. There's no,
none of the digital currencies
are backed
by.
Well, they've got some digital currencies called stable coins that are backed by fiat money.
And who is backing it?
That would be the United States dollar, right? Or the
that's the
European European
it's backed
euro.
by the dollar, but who's making sure it's backed by the dollar?
Well,
The people you don't know?
yeah, that's right.
Because you don't know who does these coin
No,
things.
that's right. And
I think that's interesting.
yes, but anyway, that's the idea behind a stable coin, is that it's backed. It has a reserve of
Dollars.
like the dollar used to have a reserve of gold or silver. The stable coins have a reserve of dollars or euros or whatever fiat currency they're backing it with. So anyway,
Okay.
so that's the idea. So all currencies exist that are used exist on something other than some commodity base. Digital currency. Now, digital currency.
Can I just say one thing more?
Yes.
And the fact that it's a currency does not mean it equals to being money.
Currency is a name that Bitcoin gives itself, right?
Yes.
Bitcoin is called a digital currency. Now, for a currency to be a currency, it has to be money first. Right? And money has, and we talked about this too,
Yeah.
there are three things that money has to be able to do.
Yeah, it has to be able to hold value over time.
It has to hold its value over time.
And it has to be something that people trust and are willing to trade with.
Right? It has to be a unit of exchange or medium of
I can't remember
exchange.
the other one.
Last one is what you measure value in.
Oh, right.
Nobody measures value in Bitcoin.
They measure in how many dollars.
That's right.
Is worth.
Even Bitcoins are measured in
Dollars.
dollars, right? So the measure of value, the unit of account for a Bitcoin is dollars. So Bitcoin is not
money.
It's not money at all, right? It's an asset, it may be an asset, and people may be willing to barter with it and exchange with it. That's what these cryptocurrency exchanges are set up to do, is to allow this barter to take place. But they aren't money.
Okay.
And they don't perform the tasks of money. So they aren't there. So a central bank digital currency is Bitcoin owned by the US government, controlled by or regulated by the Federal Reserve. That's what a US central bank digital currency would be.
Can you repeat that?
It's a thing like Bitcoin. It may or may not be a blockchain technology. It doesn't matter. It's a thing like Bitcoin that is backed by the U.S. government and regulated by the Federal Reserve. That's what a central bank digital currency would be. That's exactly what it is.
But central bank doesn't really have digital currency right now.
So it doesn't have generally operating digital currency. All of us have digital currency.
Well, yeah, with our credit cards.
No, not even with our credit cards.
Okay.
Right? So
in our bank, it just,
in our bank,
says we have
yeah,
this much.
in our bank.
But we don't have all those dollars.
No, right. It's all held digitally, right?
Right.
And they're transferred digitally between banks and that kind of stuff. But it's not a general digital currency, because so if I was to ask myself, if a bank goes under and I have digital currency in that bank, what backs that digital currency up?
Dollars.
Not even dollars.
Okay.
Nothing. Right? There's nothing that the bank can do if it goes away. If the bank goes away, that digital currency evaporates and goes away.
So I know sometimes I think that, well, it says we have this much in our bank account, but if I don't get a paper copy of that, then if the next day they say, well, you're at zero or a negative whatever, I'll say, wait a minute, yesterday I had XXXX this amount, and why are you saying that? And I'll say, well, because it's just...
Right, so we've got this
that
digital accounting, right? We've got this digital accounting of currency that's sitting there. We've got this digital representation of a dollar that is a digital representation that is owned by the bank. It's controlled by the bank. It's regulated by the banking regulation systems as to what they can do and can't do. But if that bank goes away, what happens to those dollars?
Those dollars go away, but if you have a certain amount only, the FDIC...
Okay, so the federal government back in the 20s, back in the 20s and 30s, decided in order to make banks safe, because when they went under, your currency, whether digital or paper, evaporated and ceased to exist.
So you would have to prove that you had that much in it.
You couldn't even get it.
Well, back then you couldn't.
Yeah.
But now there is that FDIC thing.
Right. So the federal government insures your deposits up to $250,000.
So as long as you don't have $250,000 in any given
More
bank,
than $250,000. They'll insure it up to $250,000.
Okay, so as long as you don't have any more than that in one bank, so you could put if you had that much that you were keeping
you can have
in
several
bank,
accounts,
you
yeah.
could just have different banks.
Or different accounts in the same bank. It's all wonderful, yes.
Oh, okay.
Okay, so FDIC.
Worry about
So
that,
so the government backs that up. So the government is backing up the private digital currency that exists between banks.
and they're doing that. I think I remember you telling me that they're doing that because it's in the Constitution.
Well, no. See, what a bank does is not in the Constitution.
No, but what the government does.
What the
The
government
FDIC
does,
thing,
what
there
the government has no promise on your digital currency between you and your bank and other banks, and the transfers between banks through this digital process. The government has no constitutional promise on that.
I'm confused because
They have constitutional promise on.
I know, but it's representing money.
But it isn't, right? They have a constitutional promise on this.
Yes.
Only this.
So
If I give it to you and you turn it into a computer program,
you're saying if I give it to the bank.
yeah, it no longer has
So
a promise.
FDIC really doesn't mean anything.
FDIC is a promise that the Federal Reserve has made that the federal government has made through an insurance program to insure the money up to a certain point.
I know, but you just said that they don't even have to do that because it's not money anymore.
It's not constitutionally required of them, but they do it for deposits up to $250,000.
Oh, so they do. Even
It was a choice. They didn't have to do it. They didn't do it before 1920.
Right. That's why we had the Great Depression.
Well, that's part of
Part
of things that came out of the Great Depression, right?
All right.
Right. So they didn't do it. The government didn't have a promise to make sure your banks were good. So they let your bank. If your bank failed, your bank failed.
All right. So we haven't gotten very far, and we're already getting to the point where we're pretty close. So have we gotten all the way to here
No,
yet?
we're going to get right here. So central bank money right now is this. This is the money that the central bank controls, the dollar, and it says right on it, you'll see it says Federal Reserve note. Right? So this kind of money, this kind of dollar, this paper thing is protected by the Federal Reserve, and it's regulated by the Federal Reserve, and how much of it is regulated by the Federal Reserve. It's owned by the Federal Reserve. It has a promise. A Federal Reserve note is like they give you this thing, and they promise you $5 worth of whatever with it.
So when we pick this up in our next one, we will get to.
We're gonna get all the way through these. So we're gonna spend another 3 minutes.
Okay.
The idea was to get
Yes.
what a central bank is, what money is, what the dollar is and is not. And now we're gonna say the central bank could go away from paper pieces, right?
They could.
Right?
In
Or
fact, they're
right.
looking
We don't
into
use
it.
gold coins anymore.
They're researching it right now.
Right. So they could go away from this and not have these anymore and just have digital tokens, just like a cryptocurrency. A digital token that represents.
Except it'd be with a bank.
It'd be with the Federal Reserve now.
Okay.
So what's the advantage of the Federal Reserve being behind that token?
Well, they stand behind.
They stand behind it.
And the
Full
digital
faith and
currencies.
credit clause now takes effect for all forms of digital currency, including between banks.
So it would even take care of what the hole we have right now.
Yes.
That they actually do take care of, but they don't have to. By
Yes.
law. Oh wow.
Yes.
That's
So,
cool.
so the advantage of it is that now you have this central bank issued and regulated fiat digital currency. Right? And these would be just collector's items. They wouldn't be spendable
Now,
or
some
anything
people are
else.
saying that they'll just take they'll just make your money, whatever dollars you do have, say you've got it under your mattress or something, and even the dollars represented in your bank account. People are saying that, well, the government's just going to make those go away, and then they're going to say this is the only money there's going to be.
So the answer is yes. That's exactly what will happen. And that happened in Europe when they moved from the franc and the...
Wait a minute. I just said that they would just take all of your money.
All of these.
These
things that we call money would expire.
And they would not switch it over to
No,
digital.
they would absolutely switch it
See.
across a time frame. And if you held on to them, they've just become collector's items and are no longer money. Right?
If you kept them too long.
There'll be a time, they'll say, between now and 5 years from now, you need to turn all this crap in.
Okay.
If you don't turn it in, it ceases to be legal tender. It's no longer currency
So that's-
because we've moved to this different kind.
That's kind of the due process kind of a thing that they have to do if they seize land.
Right. They are willing to trade these one for one. This would be a $5 bill. I'd give it to the central bank. The central bank would give me a $5 digital coin.
So don't worry about them just taking it and just like making it all disappear. You have a choice whether it's just going to disappear or not.
In Europe,
If they move into that. They're just looking into it now, though. They
in Europe, when they moved from all of the local currencies, all of those country currencies, into a single European currency called the euro, they said across the next 5 years, you can trade these things in for euros.
Right.
At the end of that time, if you haven't traded them in, we're assuming you think they're just collector's items or pretty pieces of paper that you're going to put on your wall, and it's no longer spendable.
Got it. Okay.
No longer spendable. And that'd be
That's-
exactly the same thing.
That's beautiful.
Yep.
I like it.
It would be regulated by the central bank, and it would be protected by the full faith and credit clause. Something that FTX was not.
Right.
Or let's just say Lehman Brothers was not.
Right.
Not protected by that. In a matter of fact, a current bank, if a current bank is going under, right?
Yes.
A real bank,
Right.
not
Not a
anyway,
private bank.
not a completely private, a real bank. If it's going under, the Federal Reserve will loan it money to allow it to meet the requirements of its depositors,
Oh, wow.
to keep it afloat. And if it's really sucking, it will force it to cash out. FDIC will pay the requirement on the FDIC that the FDIC has up to $250,000 per account. The FDIC will cash you out of that particular thing. If you had 10 million in a particular account, you get $250,000. Would cash it out, and then that particular bank would cease to exist. But it's not the same thing that happened to FTX. FTX requires that our policing agencies go in and find things. There's no promise there.
They're just saying, oh, it's gone.
Yeah, most people are going to lose most of the money that they deposited into that exchange.
And
Crypto bank.
sometimes we think because things aren't going the way we want them to, and we think there are problems in the system, which there are problems in every system, let's just change it all and just do this and it'll be better. I
Yep,
guess
not
that's
likely.
what they did, and that's
So-
what happened.
So,
They do
so
that.
those are things. So those are things that the Federal Reserve is currently investigating. They're investigating, and I just talked about one of these advantages is that the digital transactions currently in banks would be covered and controlled by the Full Faith and Credit Act of the Constitution. That would be a good thing. That's a positive. But the question is, what happens when we move over to those things? You know, how good are they?
So we're going to pick it up again, and we'll start with the goals of the central bank digital currencies.
Yep.
Right? So, Dr. D, thank you for joining me again.
Yep.
I like this. I'm kind of understanding it, and I hope you're kind of understanding it or fabulously understanding it. Please comment if you have questions about what we've gone over so far, and I don't know, make it a great day.
I'm Dr. D.
And I'm Sarah D.